Hi and welcome back. In today's video, we're going to be talking about estimated or quarterly tax payments. So let's get started. What are estimated tax payments? So in the United States, what is considered quarterly tax payments, also known as estimated tax payments, are payments made by self-employed individuals such as contractors, 1099, freelancers, gig workers, people who are making money and reporting it to the government themselves instead of having an employer. So what's important to note is that people who are in the self-employed category do not have their taxes taken out per paycheck, etc., because they are the ones who are receiving the money themselves. And so making quarterly tax payments is the way that they send their estimated tax to the government. Quarterly taxes can also sometimes be paid for people who are getting income from dividends, from rental income, or for other really large windfalls of cash that aren't necessarily taxed. So that is something else to consider, that it's not just always individuals who are self-employed. It could be somebody who received a bunch of inheritances of different types and didn't have tax taken from them. So note that this video is about paying quarterly taxes on a federal level. Some states actually also have income tax and require payments. So check in with your states to find out if you are liable for state taxes and whether or not you have to make them on a quarterly basis. In some states, it's on a monthly basis. There's a bunch of different regulations, so pay attention to your situation. What is estimated tax? This is the federal income tax and also what is known as self-employment tax. So when you are self-employed, you are responsible for both the employer and employee side of Medicare tax and Social Security tax. So this tax is calculated based off of your net income. In some places, you might also be liable for additional Medicare tax. So let's talk about it. The additional Medicare tax is separate from the regular Medicare tax, and it's paid by individuals who earn above a certain amount. Basically, there's a maximum amount of compensation that is subject to Social Security tax, but there is no maximum for Medicare tax. So for some individuals with significant investment income, there's also the net investment income tax. So for some individuals with significant investment income, they may be subject to that tax as well. Also, just to note, generally those with rental property income, you don't pay self-employment tax on that. Who is subject to quarterly payments? So essentially, anyone who doesn't already have their taxes taken out for them and will have a tax liability of over $1,000 in that tax year is going to have to pay their taxes quarterly. So again, in most cases, 1099, contractors, self-employed, gig workers, etc. When are quarterly tax payments due? So quarterly taxes are based 4 times a year, but what is interesting is that your fourth quarter tax payment is not made in that tax year, but it's actually made in the following year. So let me give you those dates. April 15th, June 15th, September 15th, and January 15th. Now, if any of those dates falls on a holiday or on a weekend, then generally you have the next business day. So on April 15th, you're going to be paying the taxes for income earned between January 1st and March 31st. June 15th, you pay April 1st through May 31st. So income earned within those months gets paid in June. On September 15th, you're going to be paying taxes on the income that was earned from June 1st all the way through August 31st. And then finally by January, you're going to be paying the taxes on income that was earned from September 1st all the way to December 31st. So all the days in that calendar year will get calculated. And again, you are paying quarterly taxes on the income earned within the quarter that tax deadline is for. How often do you make quarterly tax payments? So generally people pay them quarterly, meaning 4 times a year, but that doesn't necessarily mean that it's the only time that you can pay them. If you want, for some people, they find it more beneficial to pay it on a monthly basis because it's easier for them to track. And it is also potentially easier for them to not spend the tax money that they've been putting aside. It is also technically possible to make a whole year's estimated tax payments by that first quarter and then not have to worry about it until you are filing taxes. But please talk to a tax professional in order to figure out what is your estimated yearly tax total. And also, it could be a large chunk of change. So if you don't necessarily have potentially thousands of dollars ready to pay by April 15th, then that might not be a situation or strategy that you would want to put yourself in. How do you calculate your quarterly taxes? So if your income is stable and it generally doesn't change much year to year, then you can just pay a quarter of your tax liability from the previous tax year, and that would cover you in most cases. However, if your income is variable, or if you have a seasonal position or a seasonal business opportunity where you make a lot of money in certain quarters of the year and not in others, then you may want to consider the annualized method. And there is a form on the IRS's website, which will be linked in the description below. And that is how you could make an estimate as to what you should be paying on a quarterly basis based on the numbers and the potential standard deduction, etc. credits that you might be eligible for. Another thing to consider is that if you have a spouse who is an employee, you could potentially use their paycheck by changing their tax withholding in order to cover your liability. That's one thing that you can consider by having your spouse redo their W-4 and change what marital status and the number of exemptions they wish to take on their check, because that, if you are filing jointly, can change how much tax is going to be pulled and set aside already for you instead of you having to put it out for yourself. Again, speak to a tax professional to see if that's something that would be more beneficial for you. Does your quarterly tax payment have to be equal across all the quarters? The answer is no. You do not have to make the exact same amount per quarter, especially if you have income that varies within the quarter. Because again, each quarter is based off the income earned within that quarter. So if you have a very stable job where you are just getting paid the same amount, or you have contract work that pays you the same amount per month, then you could be making payments that are equal. But if you aren't and you have variable where some months you do a lot and some months you barely make it even, etc., then I would say do it based off of what you actually have earned within that quarter, because that is what the IRS is expecting you to do. What happens if you underpay your quarterly taxes? So if you underpay, then you essentially are going to owe at tax time. But also, there may be a penalty of 5% applied, and interest does accrue based off that liability and which quarter it came from. What happens if you overpay on your taxes? So if you overpay, which means that you gave the IRS too much money in taxes and you didn't actually owe as much as you gave, then you will receive a tax refund. Is there a way to avoid the underpayment penalty? So yeah, there's something called the safe harbor rule, and that is a way for you to not be subject to those underpayment penalties. So let's talk about the safe harbor rule. So the safe harbor rule actually comes in two parts. There's one that is for the average filer, and then there's another one for what the IRS considers as high income earners. If you are not a high income earner, meaning that filing jointly your adjusted gross income was under $150,000, or if you are a single file, your adjusted gross income was under $75,000, then the safe harbor rule, what you have to pay into taxes so you don't have that penalty, is if you pay 90% of that current year's tax liability at least, then you don't have that underpayment penalty. Also, if you paid 100% of your tax liability from the previous year, then you are covered again. So you might still owe, but there won't be a penalty attached because you are safe under the safe harbor rule. Now, if you are a high income earner, that means that if you are married filing jointly, your adjusted gross income is over $150,000, or if you are a single tax filer and your adjusted gross income is over $75,000, then instead of that 100%, you have to pay 110% of last year's tax liability. So I'm going to, on the screen, put an example of a tax liability for a married person and for a single person, their liability for the previous year, and then if they had a higher income, what that new threshold would be. So safe harbor rule, 90% of your current tax liability. If you don't meet that, then you have to either do 100%, meaning you paid exactly what you had last year as your tax liability, or you paid 10% over that tax liability if you were considered high income earner. So again, on the screen, there's an example. How do you pay the quarterly taxes? So there are several ways to pay your quarterly taxes. There are ways to do it electronically, there are ways to do it over the phone, and then there are ways to pay in person or through the mail. So let's talk about it. To pay online, you can pay through your online IRS account. You could pay through irs.gov, which is an app. You can check out irs.gov/payments, or you could use the United States Treasury Electronic Federal Tax Payment System. So generally, through any of those methods, you can do a bank transfer. So you're going to link either a checking account or a savings account, and you don't have any additional processing fees. Or you could pay your tax liability with a debit card or a credit card, but there will be a processing fee attached. Again, throughout any of those methods, you will have an option to do that, and you would see what that additional processing fee is charged. Note that that processing fee is not paid or given to the IRS. It is a processing fee paid to the credit card processors. For non-electronic means, you can pay in cash in certain IRS retail centers. So check down in the description below for a link which talks about that. You can also schedule an appointment with certain IRS taxpayer assistance centers. Not all will take cash, but some do. And so you'll generally have to make an appointment. And if it's for more than $10,000 in cash, then your appointment is going to be more than 2 hours, because they will count it there in front of you to make sure that you are giving them the right amount, etc. Lastly is that you could mail your estimated tax payments to the IRS. So when you look at the IRS form 1040-ES, there's actually tax payment vouchers. So what you do is you cut out a voucher and then you mail either a check or a money order, and it gives you the address and how you need to fill out either the check or the money order to send over your tax payment. So in general, the IRS really highly suggests that instead of going and sending it through the mail, that you do it by an electronic means, and they give you all these different options. And even in the form itself, they have information on the different ways you can pay them outside of just mailing it in. As always, I do highly suggest that whichever method you pay, make sure you take documentation of that confirmation, because if you use a tax professional, they will potentially need it as a form of documentation for when they file. So make sure, for your peace of mind, you have that confirmation saved, so that way if there's any type of audit, you can show that you did make a payment. So how can you minimize the impact of paying quarterly taxes when you are the one who's responsible for paying it? Remember that you should be tracking your income as well as your expenses, because this is based off of your net, not your gross. So you shouldn't be paying taxes on everything that you receive in. You need to be taking out your expenses, and that will tell you how much profit you technically have, and that's what gets taxed. It's also important to make sure that you are putting money aside. Many people, especially when they start off in business, don't realize that they need to be paying taxes themselves, and so they don't put money aside. They just take all this income in and they go, oh, this is money I can use, and then they get blindsided when they realize that they actually have a liability and a penalty because they weren't paying it in the first place. Another thing, and I mentioned it earlier in this video, is that for some people it's beneficial to be paying on a monthly basis, so that way they don't have that tax money sitting in an account and therefore tempting them. Another way to minimize your tax implication is by talking to a tax professional, because there are tax strategists out there who can help you come up with a plan and a way to lower your tax liability if you make certain moves. So yeah, that is a general overview of making quarterly tax payments. I will be making a video in the future of me actually making a quarterly tax payment myself, so that way you can just see the process. It's really easy, it's not that intimidating, and so I will have that video up for you sometime in April. For those of you who have any questions, please do me a favor and let me know, either by dropping a comment or by using my website on the contact form page. So debttail.com is a contact page, and then you can put your question in there, and that helps me figure out what type of topics that you want me to cover. If you're new to this channel, thanks so much for tuning in. I hope you got value out of it. If you did, consider subscribing. For those of you who are returning subscribers, thank you so much for your continued support, and I love knowing that there are people who are interested in this type of stuff. So it really just is a confidence booster for me in terms of like, this is worthwhile to spend my time on. So thank you so much. And as always, I hope you have a good one. Bye.